Hey guys, what's good? This is Andre and today I want to cover relative strength with you guys and just have a look at something that is broadly used throughout the industry, especially by smart money or whatever investment funds. Guys, it's really important for you to really understand how relative strength works, how to use it, and especially how to use it when you have multiple choices for your trading options. Basically, if you have, let's say, 4 stocks that are setting up for a potential buy and all of them look equally great, relative strength can be kind of the differentiator. Before we jump on here, guys, head on over to Patreon to see a lot of the trade setups completely free and then opt in for even more premium content and setups for just $5 a month. Let us know if you have any questions, and as per usual, if you want any stocks broken down, leave them in the comment section below and I'm gonna be more than happy to cover them in future videos. Now, to get started here, guys, I wanted to say, first off, when you're using relative strength, and by the way, the indicator is gonna be this guy at the bottom of the screen here, so direct your eyes for most of this discussion to the bottom of the screen. I usually like having a 50-day moving average applied on the actual relative strength indicator. Otherwise, it's kind of weird to look at it in a bubble. It offers you kind of a percentile versus what the S&P is performing, and I usually do refer back to the S&P with a lot of these because the S&P is kind of the benchmark for a lot of hedge funds out there. They're comparing their own work with the S&P, and they usually look at the performance or underperformance of different stocks with regards to their performance against the S&P. And so when I'm using this 50-day moving average, guys, what I wanted to show you here is how even with this moving average, you can see that trends do form very often actually with trade setups. And whenever you find yourself with this kind of a setup, it means that you're probably trading something that's trending quite well. Now, the way we would actually want to use this, and I'm gonna start looking here at a couple of the examples that we've been referring to throughout the last few days here, some of the stocks that we were looking to buy. Guys, it would be absolutely ideal to buy into strength and sell into weakness. That usually means that you would want to buy stocks that are doing well enough against the S&P 500, especially if they're managing to outperform. It's even better. So for instance, if we take a look at a recent example here, which was CRM, it's been outperforming the S&P for the entire year, basically, throughout this entire wave up, and we have just recently corrected below the 50-day moving average, but I think we're gonna make our way back above it. Even so, we have a credit spread going on CRM right now, so we're making money on it. Even as the stock is moving sideways here, we're not bothered about this type of movement. Now, going back to some of the other examples, for instance, we said that we would want to take a long on X, on US Steel Corp. As you can see, this guy just creeped up right above. I'm gonna zoom in here a little bit, just so you guys can see that this guy creeped above its 50-day moving average. Now, this historically doesn't necessarily mean anything because it creeped up and fell right below it quite a few times before, but it means that it's starting to slightly improve compared to the last 50 days of price action. Ideally, we would want to buy things that are above the zero line and sell them when they are below the zero line. That doesn't always pan out as beautifully because we don't always get the setups in that kind of way. But again, we're gonna compare different stocks looking at the relative strength against the S&P, and we're gonna try to understand which one are the best setups. And Suncor was another one that I referenced just a few days earlier, and it's close to the stop loss here, but we can see that this one is still underperforming not only the S&P but also its 50-day moving average. Now, if we take a look at Texas Instruments, for instance, we can see that this one is actually looking a lot healthier. It managed to creep its way or to make its way back above the 50-day, and it's now retesting it from the top. Last couple of times it did this, it failed, but as you guys can see, in the past when it did this, it managed to succeed. So this was a good enough setup for us. At the bottom here, we had a buy order here. We still have a long ways to go before our price target is reached, but it's not the worst time to move the stop to break even if you should choose to do so. Cool. Let's see what else we can look at, guys. I know that we've looked at Intel, and you know, we started out this video by having a look at AMD. and I want to look at both AMD and Intel in comparison. If you guys check out AMD's massive outperformance throughout this entire year with regards to the S&P, or in comparison to the S&P, it's kind of undeniable the fact that it did really well. Now, despite the fact that Intel is in the same exact industry and basically a very important competitor to AMD's business operations, it has been lagging the S&P throughout the entire year, as can be seen here, and only as of recent it's starting to outperform the S&P. But this is also really good news, because it means that Intel might now have a lot more momentum to continue going higher. So we're in a pretty good setup here, again, with being able to buy what has been a consolidation over here, but buying it into strength, buying it when the stock is already outperforming the S&P 500. Guys, I want to keep today's video pretty short, just so it comprises the information in an efficient way. Let me know if you have any questions with regards to the topic, and I'm gonna be more than happy to cover them. But yeah, this kind of covers what we had for today for relative strength. Make sure that you use the indicator, make sure that you have a moving average on there, and make sure that you buy stocks that do better than the S&P and sell short the stocks that underperform the S&P, and you should be doing well enough for the long term. That's all for today, guys. Like, subscribe, and I'll catch you next time. Take care.